The Bitcoin mining industry is going through a lot of challenges right now. A lot of challenges. And so if you're someone considering going into Bitcoin mining or investing in Bitcoin mining stocks, or if you're just curious about Bitcoin mining, I'm here to share with you how the Bitcoin mining landscape has changed and the tips on how you can identify the winners and losers among these Bitcoin mining stocks in 2026. So if you want to know who among these Bitcoin mining firms are going to be the winners and losers in 2026, stay right here with me to the end because I'll be sharing the challenges that Bitcoin mining firms are currently facing, and I will also share what these mining firms are doing to adapt and overcome these challenges. And lastly, I'll be sharing one very last critical important tip that you must watch out for among these Bitcoin mining firms because it is going to protect you as a shareholder and as an investor in Bitcoin mining stocks. So now let's begin with the challenges that Bitcoin mining companies are currently facing. The first challenge is block reward. In April 2024, Bitcoin block reward was cut from 6.25 BTC to 3.125 BTC. Now that's what's known as Bitcoin halving, which does happen every 4 years, where the block reward the miners receive is cut in half. Okay, so by design, the reduction of block reward does make Bitcoin more scarce, which is good for Bitcoin price because scarcity does increases the value of an asset. So this means that fewer block rewards means that fewer new Bitcoins are created. And so if the demand for Bitcoin stays the same or rises, then because of limited supply, then Bitcoin price is going to rise higher, right? So the halving event is good for Bitcoin price, but for miners, their block reward revenue got reduced to half. So that's the first challenge, which is reduced miners block reward. So the second challenge that Bitcoin mining firms are currently facing is mining cost. Since April 2024, when the mining block reward was cut in half, mining costs have also risen to about $70,000 per Bitcoin coin mined. And this is due to competition, acquisition of more machines, maintenance of these systems, and rising energy expenses. And in addition to this, there's what's called hash price, which is how much miners earn per unit of computing power. Since the last halving event in 2024, Bitcoin hash price has dropped from around $55 to $35, resulting in a very tight profit squeeze. And this has made mining firms witness the harshest ever margin environment that they have ever witnessed in history since the creation of Bitcoin. And in fact, some miners made less revenue on each coin that they mined. And the third challenge is Bitcoin price itself. Remember that in past halving cycles, Bitcoin price would rally very strongly just after the halving event. But this time, Bitcoin rally was not explosive as it used to be in previous cycles. Instead, Bitcoin price moved kind of sluggish. Then it got to 126,000 in October 2025. And then by the next month in November, Bitcoin price has dropped back to under 80,000. Now this has created uncertainty of whether Bitcoin bull run has ended or if a bigger move is still coming. And this has made it really hard for mining firms to plan or protect their profit margins. So all these challenges is what has forced miners to rethink their business model. And the challenges again, I would recall that are mining costs, block rewards, reduced block rewards, and Bitcoin price itself, which has not rallied as expected as it should be. So Bitcoin mining firms are facing all these challenges, right? Now, what are they doing to adapt with these harshest ever margin environments that they are in? First and foremost, remember that back then, miners used to win just by running more machines. And now they've realized that that doesn't work anymore. So today, instead of more Bitcoin mining machines, mining firms are now beginning to focus on two. As for electricity costs, which means cheap power, Bitcoin mining firms now need to access the cheapest power possible in order to stay profitable. As for transaction fees, which are the small fees that users pay to send Bitcoin, these fees now make up a big part of mining income due to reduced block rewards and reduced hash prices. So if you want to invest in a mining stock, you need to go through the company's fundamental to ensure that they control their energy cost and also ensure that they earn more in transaction fees. Now, the second thing that Bitcoin mining firms are doing to adapt to this harshest ever margin environment that they are in is that some of them are now pivoting into AI data centers and high performance computing. And these mining firms are able to do this because they already have large buildings, they already have the power systems and cooling setups, which are the same thing that's needed to run AI servers. And so many of them have started turning part of their operations toward AI data centers. And that switch began as early as 2022 with a mining firm called Hive. And as a result, more miners have taken this approach, and it has helped create a new income stream rather than mining firms just relying on mining rewards alone. Now, the third solution that Bitcoin mining firms have adopted in this harshest ever margin environment in order to stay profitable is by raising capital. Okay, of course, running a mining firm is very expensive. I mean, these firms need to buy new machines, they need to expand their data centers, and they need to pay off all debt. So in 2025, many of them raised billions of dollars of capital by selling more shares and acquiring debt. But the caveat to this is that whenever they sell shares, it dilutes, weakens the value of existing shares. And so come 2026, this matters a lot because if Bitcoin price remains low and or if mining companies stay unprofitable, then these companies may continue to reissue shares in order to survive. And that wouldn't turn out well for their shareholders. So those are the three solutions that Bitcoin mining firms are adopting in order to survive in this harshest ever margin environment, which is getting access to the cheapest energy as possible and maximizing transaction fees, and then diversifying into data centers and high performance computing, and then raising capital. Right. So now we come to the last point where I said I was going to share with you one very, very critical, important tip that you must watch out for to protect yourself as a shareholder and as an investor in Bitcoin mining stocks, because these mining company stocks seem riskier than they appear. All right. So the thing is, public mining companies, they don't just mine Bitcoin. Many of them hold Bitcoin on their balance sheet like a saving account that would grow if Bitcoin grows as well. For instance, by late 2025, companies like Mara, Riot, CleanSpark, and Hot Hits were among the biggest corporate holders of Bitcoin. Most of them follow the playbook of Michael Saylor from MicroStrategy, which is the strategy of buy and hold as much Bitcoin as possible as you can. But the thing is, that poses a lot of risks because whenever Bitcoin price falls, these companies' stock prices usually dip even more faster than Bitcoin price itself. And so you should want to make sure that the mining company you're invested in does not hold as much Bitcoin as possible as the others do. Conclusion of the point of this video is that the mining companies who are going to succeed in 2026 will be the one who adapt to the recent challenges, not just the one who mine the most, right? So the determining factors that will separate the winners from losers are access to low-cost power, smart revenue plans, and flexibility beyond mining. So that's it for today. And don't forget to like, share, and comment on what you think about Bitcoin mining firms. If their diversification is going to mean profitability or not. Subscribe to this channel and stay tuned for more info about Bitcoin price movements and the financial market as a whole.